Hello, everyone, and welcome to the Leaders Panel. What role should banks be playing in making the digital economy work for everyone? I'm Joy McKnight, editor of The Banker. Before we start, I'd just like to remind the audience that you can ask the questions at any time via the Q&A chat box on your screen, and we'll get to them during the session. You can also share tweets via hashtag Banking Revolution. With me are three panelists spanning the globe. I have Claire Kalmajan, who's Chief Innovation Officer at Societe Generale, John Hinshaw, Group Chief Operating Officer, Group Managing Director at HSBC, and Darren Williams, CEO of Southern Bancorp. Thanks so much for joining me today. So this is such an interesting topic and touches on so many areas, including financial inclusion, the digital divide, the democratization of financial services, the social role of banks. But let's first start with access. So Claire, I was going to pose the first question to you. What does democratizing access to finance mean to you?
Thank you, Joy, and thanks to give me the chance to do the opening and the foundation. But clearly we've seen digital advance have generated new customer demands and met some new usage, but it have also highlighted how our current financial system have some weakened points in the way it's designed and some of the complexity that is underneath it. And I've often said, actually, digital is really an opportunity to make it more accessible, more inclusive for everyone. And just some of the numbers I've noted, McKinsey published regularly a study, and across the world, there is 2 billion people currently that don't have access to a bank account or to a financial system that will basically help them to get, on the basic of the ladder, such as having a job and having their money, on their bank account, but also, starting to build a little bit of their wealth and getting some access as our system is designed today. And, in Societe Generale, we operate in some countries such as Africa, where clearly we are very sensitive to these questions. And we have even launched a specific mobile banking platform, which is called YEP, to fulfill some of these needs. Clearly, we're coming to a point where we need to reinvent banking. All the infrastructure is reshaped, of the way it's working is, on the play. We've been seeing, the light of PSD2, of open finance, which is there. And this have given access also to new entrants, to the fintechs. And for me, the wars currently, the ones that are going to win are the ones that are capable to innovate and collaborate, because fintech are nothing else than bringing very simply in mobile by design, in a very inclusive way, the financial tools to everyone, through the world. And they're setting the bar in terms of customer experience. But, it's been a long time. All the banks, including Societe Generale, we have more than 60 partnerships. We have our Societe Generale Venture Fund, where we deployed 240 million, in the last 3 to 4 years. So clearly, and I'm sure, Darren and John can say the same, we are clearly, going on the ladder of that. So all this universe is being reshaped. And just to finish, on the definition of democratizing finance, for me, what is very important is to use tech as an inclusive tool in the relationship, in the way we design. And more we are seeing that, at the heart of our transformation, in transforming the core through the usage of data, especially in risk, finance, and compliance, where, we can provide more accessibility, more real time, more transparency, and that also contribute to a better financial system.
And Darren, do you want to take this question as well in terms of the definition of democratization, but then also maybe, is it always a good thing to give wider access?
Yeah, so for us, just a little bit about Southern Bancorp. We operate in the Arkansas, Mississippi Delta in the United States, which is one of the most persistently poor communities of all the United States, one of the most and underbanked parts of the U.S. In fact, while the unbanked numbers in the U.S. are going down, particularly in this region, they still continue to exceed national averages, and then particularly people of color continue to have lack of access to banks. And we think about democratizing finance, it's making it accessible to everyone. In fact, our tagline is wealth builders for everyone. And so we want to focus on everyone having access without regardless of zip code. Unfortunately, today in the United States, based on where you live, where you're born, what zip code you live in really dictates what type of access you have. And that's particularly true in the rural markets that we serve. So for example, 5.4% of Americans or 7.1 million households have no bank account, have no relationship with a financial institution. And when you look at the African Americans, that's 13.8%. And you look at Hispanic Americans, that's 12.2%. So those numbers are even higher. And so for us, democratizing finance would mean that everyone would have that type of, would have access to financial markets. And so we see digital as a way to help solve that problem. We do think open access is generally a good thing. Even in the rural markets that we serve where broadband is not always accessible, the cell phone penetration rate is extremely high in the United States. So Pew had a study said that I believe it was uh, 95% of Americans have a cell phone, 85% have a smartphone. And when you look at the rural communities where broadband access is not as accessible, that's 80% have smartphones. And even the low wealth Americans in these markets we serve, 76% have smartphones. And it's often that smartphone that connects them to financial access. We saw that being a real benefit during this pandemic when we had to social distance. And so people were able to do their banking and actually able to receive government benefits through, having a digital platform to actually do their banking. And so we see open access as a positive thing. Now it's incumbent upon bankers, incumbent on us to really innovate and provide solutions that will benefit everyone in accessing financial services.
Okay, John, I'm going to turn to you as well. So, can you add to anything that Claire and Darren has said in terms of that definition? And then, is it always a good thing? Are there risks involved?
Sure. Thanks, Joy. And I certainly do agree with Claire and Darren's perspectives in broadening access to as many people as possible. Certainly during the pandemic, we all saw so many more people adopt digital capabilities, banking capabilities online than ever before. They had to. Branches weren't open. You couldn't deal with paper through the mail as easily. You had to do digital signatures. You had to do online banking. And now many, many more are comfortable with that, and that's a very good thing for most. But there are risks. As more and more people go online, there are cybersecurity threats that those individuals now have to think about that maybe they didn't before. And I think it's banks' responsibilities to help our customers with some of those cybersecurity risks, with education, with the right understanding of what they should do when they get a particular message and how they should verify it. There's in addition to cybersecurity, there's lots of fraudsters out there that love to send a quick text message saying, "Hey, click here and put in your bank account information." And for folks who aren't used to banking online, it's much easier for them to think this might be okay. This might be the actual bank, coming through. And then I think also as more and more financial services go online and more customers are exposed to a wider range, there are risks out there like cryptocurrency, which has a lot of upside, but a lot of downside at times as well. I think in one of your previous sessions, you had a chart showing, Bitcoin ranging from 30,000 to 60,000 throughout the year. And, people who got in at 30 and out at 60 are feeling great. And people who got in at 60 and out at 30 are feeling terrible. And so there are risks that I think a lot of consumers may not know about who haven't transacted digitally online in many of these cases before. So I do think it is our responsibility to educate, continue to protect our customers wherever possible, cooperate, with each other on things like cybersecurity and how we can keep our customers secure. And I think that will only be more and more true as more and more people get online.
And Claire, from your perspective, is that open access, is it always a good thing? Are there risks involved? What risk do you see in addition to what John has just said?
No, I concur in what John said. I think at the end of the day, banks have their role to play in terms of being the trusted partner. We have been doing that for a long time. And I think also it's what is working on the magic equation between fintechs and banks, where they can provide some of the digital advance, some of the best-in-class customer experience, but at the same time, managing a risk, managing the heart of what the financial services system is something that we are we've been doing for a long time, and we will continue to do for some time. So we have some new business model in Société Générale, such as Trésor, which is a leading bank as a service provider in Europe. So we supply about 80 neobanks, corporates through a payment, bank in a box, card up system. And basically, the acquisition of Trésor by Société Générale was really in this field of wanting to continue to innovate, wanting for the bank to continue to have a growth driver in retail, which will go further into embedded finance. But at the same time, Trésor to grow needed to have all the expertise of a Société Générale in order to operate. And often, the clients of Trésor said it's actually a competitive advantage to know that at the end of the day, all the system is backed up and supplied by a very large bank. Another example is Société Générale Forge, which is the leading European platform in terms of security token online. And, it's not trading a cryptocurrency, it's trading security token indexed on a wholesale CDBC, which is produced by Banque de France in our case. But clearly, the fact that all the system and all the new digital custodian, all the ecosystem which is growing around it, feel very comfortable to work with a Forge, as well as most of our clients which is there. So I really think it's the blend of the two that brings the best. But all the points that John mentioned around cybersecurity risk, access to data and protection to data, understanding the fundamental are clearly in our DNA and something we can share.
And Darren, from your perspective, are there risks involved? And then, how is the bank helping its customers overcome these risks or protect them from these risks?
Yeah, so clearly there are risks, and I think John did a great job of outlining the risks that we see. I don't know how many times it's happened to us. I'm sitting in a meeting with my CFO, and I get an email myself saying, or my CFO gets an email from me saying transfer money. Even if so, banks, we're tapped. Our firewalls hit, just repeatedly. So clearly there are risks, but I think the risk of doing nothing or not democratizing finance, not providing access, are even greater than the risk of the cyber risk and all the things that come along with it. So just with the ability to bring more people into the financial system, give them access. Not only does it help them personally, but it also helps the overall economy, then the global economy. And so the risk of doing nothing, I think, are greater than the risk of that may be suffered and that we can overcome by helping to train and educate and secure our customers online.
And John, I was going to ask you, Darren mentioned it before about how the mobile has actually increased financial inclusion quite a bit. But what would you say are the main barriers that still exist to greater financial inclusion?
Yeah, I do think, as Claire said earlier, not everyone has a mobile phone, especially in the developing parts of the world. Or if they do have a mobile phone, it may not be a smartphone that can access the apps that are needed to do banking and such. So there is still a large part of the globe that can't participate. And so there's some innovative financial tools that are being developed that don't require an app. They can be done with a much less smart device, which I think is good. I think the other barrier, candidly, is education. I mean, there is a generation of folks that aren't used to banking online or on a mobile phone, and are used to being in a branch or are used to being with a person one-on-one. And so I think there is that barrier for many of those folks, and we need to help them. We need to educate them. We need to reach out to them. During the pandemic, we proactively reached out to millions of our customers who needed help with digital banking and walk them through either on a Zoom type call or a phone call, or if we couldn't get a hold of them, worst case, sending them information in the mail to say, hey, let me walk you through how you get online, and if you have any questions, here's a hotline number to help. So I think that can help break down some of the barriers. I do think that as more and more capabilities are online, I think it does add complexity for some consumers, and I think there are consumers who do get confused with all the different offerings out there, and so I think it's important for banks to keep things simple and make it easy for the customer to do business, and not offer 1,000 different capabilities all at once that might confuse the customers. So there are still a lot of barriers out there. I would say number one is having a device or a capability of getting to that information, and then knowing how to use it and how to get help if you don't.
And then Darren, I think, there is a lot of discussion around financial literacy, right? And also helping people improve their financial health. How do you think that digital products and services can really help improve financial literacy? And what is Southern Bancorp doing around that?
Yeah, so thanks for that question. So we'd like to consider ourselves a very innovative, forward company, especially for a small community bank. We're only about 2 billion in assets, 51 locations, again, through a very underserved part of the United States. And digital platforms are allowing us really to scale and expand our services. So just a couple of things. In addition to having a full service bank, we're what's called a community development financial institution, which is a CDFI, which is often called in the United States. And as a CDFI, 60% of our customers in communities are what we consider low wealth, and so we're working with folks who are more likely to be and underbanked. And so at our one of our companies that we work with is a family of companies. Is a company called Southern Bancorp Community Partners, which is a financial development service provider in addition to being a small loan fund. And so we teach one-on-one home buyer counseling, credit counseling. We help people repair, restore, rebuild credit. And in the rural communities we serve, relationship banking is very important. So we know these customers. Our folks go to school with them. They go to church with them. Their kids play together. And so that one-on-one relationship is very important. What we saw during the pandemic is obviously we had to social distance. We couldn't get together, but people still had questions, still had needs. And we were kind of moving to more and more toward, like we're doing today, a virtual platform. And so now we're able to provide those courses through a virtual platform. We're able to talk one-on-one through Zooms, and that's been very, very well received. And it is allowing us to scale that work. And so not each one of our branches has access to one of these counselors, but through technology, all of our regions have access. So that's very important. But then what we have said for some time now, our Chief Innovation Officer, Vance Smiley, always says this, is that, community banks, we have outsourced all of our innovation. And now our core providers provide the innovation. They provide a solution that everyone has to fit in. A better solution, why fintechs are very popular, is they are able to personalize that solution. And most fintechs, the most effective apps, do one or two things well, as opposed to trying to do, be everything for everybody. And so the rails that currently exist for us don't really allow for the type of innovation inside the bank. And so we have created our own cloud-based core processor that allows for an open architecture and APIs. And so we're building solutions. We have teams that call mod squads, and we're not hiring bankers. We're hiring people who have the problem, as well as folks who know how to innovate. And we're asking, what's the problem, and how can we solve that on this cloud-based platform that we built? We're able to build these solutions at a fraction of a cost that would have cost us to go and get this from a core provider. In fact, at our size, the core provider would likely not call us back to build a customized solution for us. So, for example, we're building apps right now for teachers. We're building apps for young people who are just starting their financial journey. And it's got a social media feel. So when you sign on, it's got a health score. When you do things that are positive, your health score goes up immediately. It's got a social media feel, so you can share kind of what you're doing, and you can with other people. It's got a little blockchain technology, allows you to have, instead of having your bank account that you give to the world, it has kind of a private key, and then you give public keys to the folks you want to. So I know I've been guilty of joining a health club and then moving and never canceling that membership, and it just keeps dinging my account. Well, with this technology, I can give a separate key to my health club that I can't give to my utility provider. So I can cancel the health club membership at any time I want to on my own. And so we're trying to build those solutions that are geared and tailored toward the problems that people have that are narrowly tailored, specific, and really flexible and agile, and geared toward what the problems that individual people are having. That's what this technology allows you to do today, to be very specific and customizable for your customers.
And Claire, do you want to come in and sort of comment on Darren's, those, to me, it sounds fantastic in terms of hyper personalization that you can do with the new technology.
No, but that's very clear what we are seeing, and I totally concur to Darren. I think some of the way we will succeed into democratizing finance is clearly by better understanding the data and pushing personalized offers. So some of the things that have been very successful are small nudge, honeypots, which are basically day-to-day nudging. Or even, in the UK through Monzo, when the push notification arrived, which was just the basic of, you've just paid your fuel, or you're going to be paid in 2 days. Did you think about what you're going to do about your money? These small nudges that basically integrate your day-to-day behavior. So that's the basic, but I think that's really what's going to change the game. And we are seeing that some of the propositions are embedded through traditional banks, but it have yet really to unfold. Some of the reason, I guess, it's not done yet. There is multiple layers. There is a regulation and the interpretation of regulation, and the way banks want to position themselves through the regulation. A second point clearly is all the phantasm around data monetization that could be in banks, which for me have always been, I've always laughed about this story, because they say, like, guys, you're really poor in terms of data compared to, a GAFA. So, clearly, what are we really talking about? But clearly, going back to the role of trust of banks, I think, most of the traditional banks don't have any appetite about monetizing their customer data, but, they're always exploring how can they make better the online servicing more accessible and to increase this area. And just to give you an idea, in our 24 million clients across 7 geographies, in retail in Société Générale. We have 65% of customers that are enrolled. They connect 30 times a month through online and mobile, including in Africa. And most of them, are very comfortable with using digital, or, using a call center or remote. So we are seeing that there is more comfort around that. So regulation, the perception of data, and probably the last point, which is hindering us a little bit, is also how senior executives, in banking, understand how do you need to design for tech and for data. At the beginning of your product, we are not designing any more financial products that we distribute through channels. Actually, the way we deliver our product and our services and our offer is mostly through digital, combined in some of our model with human interaction, with telephony, which is always needed as well, because when we are talking about people in needs, and that have difficulties, often, it's not a chatbot that is going to manage and help them through the process, but it's really having, this combination. And I think, this knowledge of technology was part of the creation of my role in Société Générale, but is not always present yet, and it takes time. The ticket to upskill in all these areas take time. Will probably take a generation.
John, I don't know if you want to add anything, or at this point.
No, I think Claire and Darren, they said it quite well. I mean, I do think that look, this is not going in the opposite direction. It's not like we're going to wake up tomorrow and there's going to be less adoption of digital. It's only accelerating faster and faster. And we do, as well said, we do need to partner with fintechs that are out there as banks. Certainly, there's competition in places as well, but we spend a lot of time looking at partners in the industry and how we can leverage their platforms and bring their capabilities to our 40 plus million customers around the globe. And I think that's a little different approach than a few years ago, where the bigger banks thought, the fintechs are just competitors. In reality, they can be great partners as well. So that's probably the other thing. I think that'll be a continued trend is if you're a fintech startup and you can have access to a Société Générale or an HSBC's, customers, and bring them more value, and we bring more value, it's a good thing for everyone all the way around.
Okay, great. I was going to sort of switch things a little bit, but we also have a lot of questions coming in from the audience, so super exciting. But I was going to ask one more question, and it's to Claire. Obviously, during the pandemic, corporate social responsibility has really risen up in terms of importance, alongside ESG, environmental social governance criteria and things like that. But do you see now a bit of a coming together, a convergence of innovation and CSR? And so, this comes back to, the rethinking of the bank's role within society, I think.
Yeah, but definitely. Actually, we just appointed, last week was appointed our Chief Sustainability Officer, which report now in the general management. And we just appointed the program director today, to implement ESG by design within Société Générale. So I think, it's something that is going to be massive. It's something that is top of the preoccupation of all our customers, but also of all, the executives. I don't think it's something that is driven by regulation. Yes, banks have, obligation and need to report on their ESG data in regular basis, and the level of increase in ESG reporting will continue. But I think it goes much deeper than that. I think it's a full business model, full business area, a full way, as you mentioned, of the way we will have to rethink finance, and technology have a key role, and innovation have a key role into that. And it goes back a little bit to what we are talking with Darren and John around data, protection in cybersecurity and etc. Because the world we are going in financial services, and we are clearly seeing that with digital assets and all the infrastructure, which is progressively tokenized and digitized, is going to be real-time data, real-time infrastructure. It may take us 15 years, 20 years, but there is some geographies that we are seeing, such as China, that are leapfrogging because they didn't add, the traditional legacy infrastructure and legacy systems. And we are in this journey. We are now, we are, as John mentioned, we are not getting back now. So, really for me, the ones that are going to succeed in the next 10 years are the ones that are going to put at the heart of their, purpose and what they do, innovation and CSR, and to manage to really blend technology and digital to support the CSR agenda. And it goes around really giving this access, but much broader, to not just look at short-term profit or how the way we our shareholder benefit in a short-term cycle, but also what is the contribution, what is the purpose of the company. And in France, there was a PACT law that was published, voted 2 years ago. And some companies decided to redefine and embed their purpose in their status. At Société Générale, we had some work at this time being to redefine our purpose, our mission statements with our colleagues, and we put innovation and CSR as one of the key levers of what we want to be. We didn't went as far as putting it in the status, but I will not be surprised that in 10 years, most of the banks worldwide have it, actually.
Excellent. So there's been some questions coming through, and Darren, one is directed right at you, and it comes down to about criteria around know your customer, or KYC. So the question is, well, first of all, they say great initiative for making banking services available to the underserved. Do you have to modify your KYC criteria, giving many of those new to banking clients that they won't be able to provide the typical documentation to open accounts and onboard with the bank?
Yeah, so surely we're not giving any pass by the regulators from our KYC responsibilities. But what we're some of the things that we're doing, we are being a little more flexible. So, for example, often in the U.S., most banks check check systems, which is a system to see if you've kind of run afoul with a bank before they will open up an account, and then of course we'll have a minimum deposit. We don't have a minimum deposit, nor do we check systems to see if we're going to give you an account. Now, if you've defrauded a bank before, then we might not open up an account, but we do allow for kind of liberal account opening processes, because we do want to democratize finance. We do want to provide everyone access to capital. If you don't mind, Joe, I'd like to go back to the question you asked Claire, because I think what we're seeing as a community development finance institution in the United States, the two pandemics, the global pandemic that was coronavirus, plus in the United States, the murder of George Floyd had repercussions around the world. And what we're seeing in our banking space, we're seeing more and more people wanting to partner with CDFI banks. We've been around 30 plus years. We've been kind of the quiet secret for many folks. But when groups like the Business Roundtable, 200 largest businesses in America, are stepping up and saying, we want to advance racial equity, then you're starting to see these unique partnerships. One that I'm really excited about is with Square. So Square, one of the leading global payments platforms in the country, a very innovative forward company, has now made an equity investment in Southern Bancorp. So little Southern Bancorp in Arkansas and Mississippi is now partnered with Square. And I'm excited about what will come from this. And, clearly they love our mission, but it's also the fact that we're trying to be very innovative and using digital to deliver services. And so we're excited about what might happen there. And it's also opening us up to, investments from Bank of America, from Chase, from large, money-centered banks that typically wouldn't necessarily operate in some of the small markets and don't operate in the small markets that we serve. And so the partnership between, the very hyper-personal community bank like ours and these large banks that have a lot more resources and connections, that's going to allow for, I would say, more tailored digital products, more tailored digital solutions, and for democratizing finance. So I'm really excited about that as well. I wanted to add that. Thank you.
Excellent. And the next question is around, more gender inclusion, more including of women, especially. So I was going to aim this towards John, but in less affluent countries and communities, women are more often unbanked. Do you have digital solutions to address this gender difference in financial inclusion?
We do, and I think it's part of what we've all been discussing today, in that we want to offer our solutions quite broadly, and we don't discriminate on gender, on ethnicity, on lifestyle choices, or any other category. We want to bring as many people into the HSBC family as possible. That's a broad statement. Now you get specific. We actually have outreach programs to specific ethnic groups, specific underserved communities, and certainly in some countries, women would fall into that category. And so we would reach out specifically to try to bring more women into the bank, both as customers, but also we want our employee workforce to reflect our customer base. And so we have an active program to recruit more women into senior management, to promote more women throughout the bank. We actually hire 50-50 into our bank, but then as it moves up into management, it does change the percentages. I'm happy to say over the last 2 years, we've increased the percentage of women in senior management from kind of the mid-20s to the low 30s. And we're going to go up from there. And so I think that's the other responsibility of banks, is to have your workforce reflect your customer base as well.
If I may add something on that, Joy, I think it goes deeper than differentiating your digital offer. I was actually with the France have a Minister for Equality, and at the end of the year there will be a law proposed to Parliament, because they identify that some of the women that were under violence or difficult situation, actually most of the time had their money from their salary paid into the bank account of the husband, or into a joint bank account that after they cannot access. And actually part of the law will be to make it accessible for the woman, even if it's on the account of its partner. So I think it goes deeper than just a digital proposition. I think actually you're touching, when we are talking about equality and in developed countries such as France or undeveloped countries, I think it goes around all equality at work, all the change that have been going on in society, and how our financial services and financial offer and our system reflect fairness in the way we can include all of them.
And Darren, do you want to add anything?
Yeah, no, much like John said, it's very important to us that our workforce reflect the diversity of the communities that we serve. And so for us, making sure that we have racial and gender equity is very important. And so we clearly work on that internally. But with regard to our services, what we find, particularly our financial development services through our nonprofit, where we're really teaching financial education courses, we find that in the rural markets we serve, it's often women, in fact, women of color who take advantage of these services. In fact, as high as 80% of the services we provide, this kind of financial education, financial training, really are geared toward those who take advantage of them are often female, and so we try to be very specific. We try to be inclusive in those offerings, and we found that in our particular financial development services, there's been a significant uptake for women for those services.
Excellent. All right. There's another question around the carbon footprint of digital finance, which I think is quite interesting. It says, the question is, what is the carbon footprint, and then how does this impact climate change goals? But obviously, it's a bit hard to actually put a number on it. But in terms of what the banks are doing to take this into consideration, Claire, are you looking at this?
Yeah, definitely. I mean, as I mentioned, now we are producing a regular ESG reporting, and some of the criteria are around, our carbon production, in our different units. So, Société Générale in France produces the same amount of energy to work than a town, which is up for 1 year. So it's exactly the same amount just for the company in terms of our production and day-to-day. And optimizing that is definitely at the heart of our priorities and what we want to do. And for that, we are progressively developing and partnering with companies such as Planet or Sweep, or, in France there is and in Europe there are a couple of them which are now fastly growing. And I think it's an industry game. I was this morning with our deputy CEO who is in charge of all the agenda of ESG, and she had just spent, last week, 2 days in a seminar with 30 of her peers worldwide to think about these topics and what are the impacts. So it's an important one. I will suggest that we don't go to the technology greenwashing. Sometimes I have people that tell me like, oh, we should not use AI because, or, we should not use our video when we are working remotely because, it consumes energy. And I'm like, okay, at one point we also have to be practical. Remote working is great because you can spend more quality time with your family if you have the chance, or, maybe doing some things and arranging, working more flexibly on the ways you want if you are comfortable with it. But, doing the video is also something that we may have to do because, it's clearly engaging. And my other point is, calculating the digital finance area is important, and the way, globally, your company produces carbon, but more importantly for banks, it's also around the financing area. It's around financing, climate change, taking engagement such as we did to get out of, coal financing by 2030, to take the net zero-based carbon engagement, to engage with other banks into this area. I really think, that's where the bulk of the work is. Digital finance is important, but kind of financing, the new projects are critical.
Yeah, Joy, let me also add a few comments there. It's quite timely because I spent this morning at our Sheffield data center, which is one of our UK data centers, and we were discussing the carbon footprint of the digital capabilities at HSBC. And so I can give you an exact stat, because we've added it up now. It's 26% of the carbon that HSBC produces comes from our digital footprint. And so we've now identified that, and now we have a roadmap between now and 2030 to get that to net zero, and as close as possible to pure zero, and not have to do too many offsets. But certainly things like putting solar on all of our buildings, buying renewable energy, cutting down the energy that a lot of the HVAC and other equipment systems historically have used by putting greener and more thoughtful capabilities into our centers. And that's our internal focus. We're also doing that with our key suppliers that provide technology services to us. And then, as Claire mentioned, we're doing this with our customers as well. And we're out with all of our customers talking about their journey in sustainability, what their goals are, and how do we help finance that? How do we bring innovative solutions to that? How do we partner with them? It's great timing on the backs of COP26 right around the corner, where we'll be there, and our CEO chairs Prince Charles Financial Services Committee on Sustainability. So this is a very important part of HSBC, and I know all of the global financial institutions around the world. And it is important to understand what the digital footprint of that is. I think the other piece, without opening a can of worms too much here, is there's a lot of discussion around crypto and whether crypto is good or bad or this or that, and clearly certain parts of crypto do have an environmental impact, and I think it is something that we're going to all have to deal with over time is, are we comfortable as crypto expands and grows with the environmental impact of that? Or is there a different way to think about it, whether it's central bank digital currencies, as Claire mentioned earlier, or other ways that, currency becomes digital but doesn't quite have the environmental impact that crypto does today?
Yeah, there was a few questions around crypto actually that were sent in from the audience, and then someone's around, when will regulators actually address this? But then also there was a question around, decentralized finance in general, so DeFi, and maybe we can touch on both of those, and maybe Darren, I'll ask you first. So, what is your concerns around decentralized finance? Do you think that's a way forward of increasing this access to financial services, or?
Yes, I'm sorry, Claire. Can I go back? Because I really want to share our kind of sustainability journey, because I think this would be unique for a small community bank. So we are members of an organization called the Global Alliance for Banking on Values, or GABV. It is a network of 60 plus financial institutions around the world that, well before it became popular, were focused on sustainability issues. Well before some of the bigger banks started thinking about this, these smaller banks were always focused on this, and I'm really proud that just this week, actually Monday and Tuesday this week, I led off. I'm on the board of the GABV, and so I'm on a Zoom call that's got folks from 5 different continents, and I'm really proud of my particularly European colleagues and what they've done. Triodos Bank, for example, is a bank that's been a leader in this space for decades. It's not new to them, and I'm learning a lot. I must say that a small community bank like ours that's been focused on really on building net worth, on really reaching the underserved, really poverty alleviation, we're starting to think much more about our own carbon footprint and our own sustainability journey. Because what we find is, I got a stat the other day that in the United States, the discriminatory past in the United States just continues to rear its head in a lot of places. And one is around the communities that were redlined. So there were a number of communities, often Black and brown communities, that were redlined in the United States. I'm told that those communities today are several degrees hotter than those that were not redlined. Of course, they're more poor, they're more filled with people of color, but oftentimes those who are in deep poverty and those who are most susceptible to issues of environmental challenges are the same. And we know as the planet gets hotter, the impact of that is going to be felt differently by different groups. And often those poor communities are going to feel it worse. And so we're beginning to look at our own carbon footprint. So we've started to, measure our own carbon footprint. We have this goal, of course, to get to net zero. Many members of the GABV have, signed on to the Paris Accord and are really actively taking a lead here. And I'm learning a lot from them, particularly my European colleagues. And I just want to say we're pretty proud to be a member of the GABV and what we're doing in that space to really finance the change that we want to see in this country, including around the world, and including reducing the carbon footprint and trying to get some handle on climate. So I wanted to highlight that, because most folks wouldn't think of small $2 billion banks really thinking about those things, particularly one that serves in a rural community where there's a lot of agriculture.
Excellent. Thank you so much, Darren. I thought that was really interesting. Does anyone want to take on the concerns and hopes for DeFi? We have just a couple minutes left. Okay, Claire.
No, I'm happy to go, but as I oversee a couple of areas on stablecoin and CDBC wholesale, so probably a bit more easy for me. But if someone else wants to go, they can also chip in after. I think in terms of regulating cryptocurrency, that's the fundamental of the problem. Cryptocurrency don't belong to a country or to a place. So we've seen China trying to refrain and prohibit the usage of Bitcoin and cryptocurrency within China. And clearly, again and again, we are seeing that most of the stock actually of Bitcoin is owned by China, is owned by Chinese people, and there is no movement, significant on the stock. So that's the point, which is it's hard to regulate something which actually don't belong to a country or don't belong to a financial system or to a place. So what regulators are very quickly replying, and central banks, is actually to create retail CDBCs and wholesale CDBCs to introduce some of the advantage to the system as fast as possible. But each country don't have the same benefits. So China have implemented in an underbanked population, or some of the areas have quickly take up because of that. It's not exactly the same in countries that are already that already have bank accounts or different area. I should precise that Société Générale don't offer any services around cryptocurrencies. So for us, we treat it as a volatile and a very high risk investment, as John mentioned and earlier, and it's not part of our service and offering. We focus on stablecoin and security token through the CDBC wholesale, which is offered by Banque de France. So just some couple of answers, but I think it's a story that we'll go through in terms of DeFi. Clearly, I think that's something that, as I was mentioning, our infrastructure is transforming and will go towards more tokenization, more, principles that we can find in the DeFi. We've done, through Forge, our first operation actually in the DeFi, where we mandated a partner, Maker DAO, in order to operate and nominate someone to operate this transaction in a closed loop. So we remain within a Société Générale environment, but we'll do a first experiment. It's not sure, we'll see a lot of demands from partners around it. So it's also a market which is driven by demands by our clients, which is, at the end of the day, a commercial area. So there is too many unknowns for me to really, talk fully about it. It's a reality, and we have to understand and apprehend what are the threats, what are the opportunities. And one of the way we are doing it at Société Générale, at least, it's to try to understand, okay, let's experiment and let's try to do it in an environment that is safe for us, that is compliant by design, and that will, help us to understand better, what is exactly possible on this area. So that's the way we think about it.
Okay, great. Well, I have to say I'm so sorry, but our time has run out. But a huge thanks to Darren, John, and Claire for such an interesting discussion. Thank you so much.
Thank you, Joy.
Thank you.
Thank you, Joy.
So this is the close of day one. Thanks to all our speakers for taking part. It was a terrific day with some excellent contributions from everyone. We had insights from policymakers, including Mairead McGuinness, EU Commissioner for Financial Services, Financial Stability and Capital Markets Union, and also Guy Oberman, UK Minister for Pensions and Financial Inclusion, both of whom touched on the important role that financial services will play in the post-pandemic recovery. We also had former rogue trader Nick Leeson remind us of what the financial industry can learn from the past to build for a better future. We had some great insights on the growing importance of financial literacy and how it can be achieved. This is a topic very close to the FT's heart, with a recent launch of our financial literacy and inclusion campaign. We also covered payments, open banking, and explored how to make the digital economy work for everyone. So all in all, it's been a great day. Just a quick reminder that all the sessions from day one will be shortly available on demand on the website for 30 days. Please tune in tomorrow morning for another great day, kicking off with a fireside chat with co-CEO and co-founder of N26, Max Tyenthal, and other highlights will include panels on how banks are meeting the needs of small, micro, and medium-sized enterprise, insights from Asia on how branch banking is being reimagined, fireside chat on the outlook for crypto with Bob Diamond, former CEO of Barclays and founding partner and CEO of Atlas Merchant Capital, and insights on whether and how fintech can help bring more women, who make up 55% of the world's population, the world's unbanked population, into the banking net. So that just this leaves time for me to bid you adieu until tomorrow. Thanks again for joining me.